Well, good day, everybody. My name is Bill Callahan. I am the Director of Government and Strategic Affairs for Blockchain Intelligence Group. Blockchain Intelligence Group is a cryptocurrency and blockchain forensic and data analytics firm. I'll talk a little bit about that some more. My past life, I was a special agent with the Drug Enforcement Administration, retiring as the special agent in charge of the St. Louis division. During my time at DEA, we get to see some financial cases, a lot of financial cases. I ran a financial investigations unit, and during that time also dealt with some cryptocurrency. Hey, basically today I want to thank everybody for inviting me from the Anguilla Financial Services Commission to be here today with you. I am calling in from just outside of New York City, where this time of year is usually dark, cold, drabby. But I see that you all sent me a ray of sunshine that is beaming into my room. So thank you for that. Hey, I'm just going to go into my presentation. My presentation is some of the basics on cryptocurrency, as I've been attending various webinars and training sessions. It's really answering questions that people have in compliance, in AML, KYC, and in law enforcement regarding cryptocurrency. So I'll try to keep it at the basic level. I did send a message to many of you that registered via LinkedIn to see what you are looking for. Thank you for your responses, and hopefully I'm covering what you're hoping to hear. I did get a chance to hear some of the earlier presenters. Hopefully this fits into what some of them were saying, especially when it comes to risk, which I believe many of you are here for. Okay, let me just start this. Okay, just before I get started, I just want to throw something out to you. Who's old enough to remember saying, little game I created here, I'm not getting into a stranger's car in a city I'd never been to before, or be driven to the airport, a conference, or dinner. I think we've all said that at one time or another, but I am probably right when I say most of us have the Uber app now on our phone, and we use Uber. Let me ask you this question. Who is old enough to remember saying, I'm not staying in some stranger's house or apartment in a city I've never been to before? Have we all said that? Probably have. We probably told our children that you're not going to do that, but they're all using Airbnb, trust me, that they're doing that. There's a point I'll make to all this regarding cryptocurrency. Let me just ask you two more questions, I believe, here. Which company is the world's largest media outlet but creates no content? If I was in a room with you, I know somebody would have reached out or shouted out Facebook. That's correct. And which company is the world's largest shopping portal but owns no inventory? Again, I just want to get yourselves into a mindset here. Many of you are probably answering Amazon, not the world's largest. The world's largest is Alibaba, but Amazon is a close second. What do these companies have in common? Why am I raising it? Why are we going to talk cryptocurrency, but instead I'm opening up with Facebook and Airbnb and Uber and Alibaba, right? The point I want to make here is these are all peer-to-peer systems. Facebook is the world's largest media outlet, creates no content. And Alibaba, the world's largest shopping portal, no inventory, so forth and so on. These are peer-to-peer systems. What is cryptocurrency? Cryptocurrency and blockchain create a peer-to-peer for finance, contracts, etc. Decentralized finance, financial transactions without banks. A taxi service without taxis, right? We think about that. A hotel service without hotels, when we think Airbnb. So I just want to start out, just want to put you in that mindset. Sometimes as I go through these presentations, people have these aha moments at different times. So hopefully, if you're new to crypto, not understanding it, asking that question, hopefully I'll answer some of them here today. Before I begin my presentation, however, I like to start where I end with my contact information. I don't like to go into a long rambling speech about myself. If you'd like to learn more about me, that QR code there will take you to my LinkedIn page. Please take a picture of it, snap that. Please connect, follow me. I'd like to connect with you out there as well. If you have any questions, I'm on LinkedIn. There's also my email address is also there as well. And Twitter, which I don't use as much as LinkedIn, but either way, if you have a question afterwards, something you may be confused about or something you'd like to know more about, I will definitely try to get you the answer. So this will come up again. So hopefully you will connected with me. Here's the goals for today. So I'm just going to provide some basic fundamental understanding of cryptocurrency, blockchain, distributed ledger technology, and some basic investigative techniques. I know it sounds like a lot to cover, but there's a few things that hopefully you'll take away from this presentation. Let's get into virtual currency. What is it? Well, it's a digital payment system. There's perceptions of elevated levels of confidentiality. All right. And I said perception of elevated levels. It is not completely confidential. It is not completely anonymous. And that is something I like to tell the story. I talked to compliance and AML heads at various VASPs. I think you've heard that earlier, virtual asset service providers, banks that are going into virtual currencies, dealing with Bitcoin. And one of the first things people say during an interview when they go in for these AML type jobs or compliance jobs is, yeah, this is all anonymous. No one knows what's behind it. And that's usually for the person conducting the interview, the end of the interview, because they understand that there is a perception of elevated levels of confidentiality, but it's not anonymous. Look, it's entrenched in both domestic and international commerce. And as I've come to study this more and more, it works well for international commerce. It disrupts the banking industry, in particular when it comes to correspondent banking and the fees associated with that. There's over 6,000 cryptocurrencies, and that number continues to grow. For this presentation, for what I'm talking about, I'm pretty much going to be sticking to Bitcoin as Bitcoin becomes really a world's currency. I'll touch upon Ethereum and some others, but that's where we're going to stick for today. Most of my slides here, we could probably spend 20, 30 minutes on just that topic. So this is just an overview. Again, hopefully what I do is today is hopefully motivate and inspire you to learn more, and as your institutions take these on and become more involved. Finally, it's highly volatile, as you've probably seen. It's highly volatile. I like to say when I'm in front of a group, if Kim Kardashian is talking about it, you probably want to stay away from it. That's the only investment advice I give. I tell people my presentations are not about an investment. As a special agent conducting financial investigations, primarily my career I spent doing trade-based money laundering. So definitely was down in the Caribbean a lot, down in Central and South America a lot. To me, when I talk to law enforcement, I talk to investigators, compliance, to me, this doesn't matter if it's worth 10,000 or 60,000, if that's what it's worth today or somewhere around there. As long as there's value, as long as that value can move across border, what I look for, I always said, I want to know how that bag of, let's say, $1 million in drug proceeds that was sitting in, New York City, where I worked, how does that $1 million make its way back to Colombia for the load of cocaine that was sold? But that $1 million never leaves New York City, right? How does that happen? And that happens through this transfer of value. And if it's computer parts, if it's cell phones, jewelry, watches, whatever it may be, or now virtual currencies such as Bitcoin. That's where I come from, and that's the perspective that I hope to bring to it today. Again, what is virtual currency? So virtual currency is a digital representation of value that can be digitally traded. It functions as a medium of exchange and or a unit of account, a store of value, but does not have legal tender status, okay, in any jurisdiction. Now, with the exception right now of El Salvador, that has made it basically the legal tender, unlike here in the US or in the Caribbean, where you walk into a place of business with a local currency, they basically have to take that local currency in exchange for something, or it's pay taxes or for real estate, whatever it may be that you're doing. Something to remember here, and this is, I try to get these little things, people who are new to it, virtual currency is neither issued nor is guaranteed by any jurisdiction. And it fulfills those functions of currency, right? But it's only an agreement within the community of users for that currency. And this is what gives it value. It's the community of users. All right. And I'm going to give you an example of that here in a moment. But a word that I do want to put out here to you, if I was giving a test at the end of this, which I not today. No, I don't normally give a test, but I do mention virtual currency, right? Virtual currency is distinguished from fiat currency, which is referring to real money, the dollar, the dinar, peso, yen, right? That's euro. That's fiat currency. When you hear the term fiat currency, national currency, real money, okay, and it can be in a coin or paper money, wherever that's designated as legal tender. And I believe we have a number of folks throughout the Caribbean. I also believe that the U.S. dollar, is accepted as U.S. as legal tender in a number of countries. So where do virtual currencies come from, right? It's what every kid asks. Where does it come from? Well, virtual currencies are issued by private developers, something else to remember. It is not issued by governments, it's issued by private developers. Now, I'm not going to go into it in this presentation. I think you may have heard something about it or will hear something about it in another presentation about central bank and digital currencies. Yes, those have more of a government hand in those, but they are called central bank digital currency, and it's a little different from virtual currencies. Here in the US, I've been able to sit on some conversations about what's being developed, talked about. It will be different, whereas a virtual currency sits on a public blockchain. Not sure how much will be in public view of a central bank digital currency, but I know you'll hear more of that. And I think in 2022, that'll definitely be a topic that compliance and AML type folks will be looking at. So there's two types of virtual currency. And for those that are, I would say skeptical, but just don't understand, we deal every day basically with with virtual currency. And I like to say that in law enforcement, especially in the US federal law enforcement, where a good time of our career we spend traveling. And we all have our favorite airlines, our favorite hotels that we try to stay at, because we are collecting points. We're collecting a virtual currency. It's a currency that I can trade in. For instance, with Marriott, right? If I stay at Marriott, I get points. And that goes for Hilton and Hyatt and the others. I get points. I can take those points. I can trade them in for free nights. Sometimes I could also trade them in and go shopping. I recently learned I can buy a whole bed set with my points if I like the Marriott bed that I've been sleeping in, right? So that's a form of a virtual currency. And I will tell you, to me, when I was an agent, that had a lot of value. If we talked about Bitcoin versus Marriott points or United Airline points, I would take the points, because the points I could trade in for a week away somewhere. I could take my family. I could get some airline tickets, right? So it had value. It had value because I bought into that community, right? I was going to be in that community. Now, the two types of virtual currency I want to talk about are centralized and decentralized. Our centralized are going to be more of our, again, hotel, airline type points. I know there's a number of retail establishments and restaurants also that have point systems that have, on your phone. I know now here in the US, I don't know if it's expanded outside of the US, McDonald's has a point system. So every time I go to McDonald's, I get some points. And again, I could take those points and cash them in for a hamburger at a later date. But it's centralized. It's centralized, meaning that it's controlled by a central governing board. That may be, the Marriott who controls that, centralized currency by the government. And then there's decentralized virtual currency. As I said, that's what we'll be talking about. Bitcoin is a decentralized virtual currency. There is no place, right, to go to if I don't agree with the number of Bitcoin for whatever reason, or I lose my Bitcoin or something. You hear about people, wallets and losing keys. There's nowhere to go. At least I know if I lose my phone or I forget my password to my Marriott points, I can go to a central location. I can call a 1-800 number and I'll get my points. We'll figure that out and give them some personal information, and they'll give me access back to my points. So just a difference there to keep in mind: centralized versus decentralized. Here it is, just in a visual format. You see centralized, there is a central point of failure, basically, or a central point of contact, and then decentralized, where there isn't that single point. Cryptocurrencies, I introduce another word here. Cryptocurrencies are decentralized and distributed. Cryptocurrencies use a network of connected nodes or volunteer computers to broadcast transactions and record transactions. These nodes are independent of each other. What this means is basically no one country or business owns a majority of the nodes, which makes things difficult to change. Whereas, again, I don't agree with something with my virtual Marriott currency, we can change things, right? Here it becomes very hard to change, especially after a transaction is made. So decentralized and distributed, again, taking a look at what that would look like visually. I'm not going to go into great details on the 4 types. I just wanted you to kind of see them here. But there's basically 4 types of cryptocurrencies. One is the store of value cryptocurrency. So we're talking about Bitcoin, basically, where you're using it as a payment. The next one is a digital currency. For example, Libra. That's a currency that was developed for the Facebook network. Coming out, won't go into too great the length on that, but it's a digital currency within a network there. Utility token, and I'll briefly touch upon Ethereum. This is an Ethereum token, the utility token, and you've heard probably of Ethereum, and we'll talk about some smart contracts as well and what that is, and then a security token. Again, just going through this quickly, Bitcoin is a type of digital currency in which encryption techniques are used to regulate the generation of units of currency and verify the transfer of funds. And I'll speak about that a little bit more. Libra, as I said, is Facebook's, is to create this global currency, where Bitcoin, I explained, is a series of nodes and volunteer computers, and any one of you out there could become part of this volunteer network, could download the entire Bitcoin blockchain and be a validator, be a node, right? You could do that. Libra is going to be more closed. It appears that it's going to be your major companies, MasterCard, Visa, etc. Which, one of the things is looking at cryptocurrencies, I think we're always looking for what's the new gold out there. And, they say, well, Bitcoin's the new gold or crypto's new gold. It's data. This is a way to collect data here. Utility token, an open source public blockchain based on distributed computing platform and operating systems featuring smart contract functionality. Many of these are on the ERC-20 contracts. The security token, I'm just going to go over this real fast here, just so you know that it's out there. I want to know, what is Bitcoin? So going back to my beginning here, designed as a peer-to-peer value transmission system based on cryptography. Okay, it eliminates the need for a centralized third party, the Federal Reserve or a financial institution. It's not good or evil in itself, right? It's just a format for value transfer. Just like, as I said before, I dealt a lot in new cell phones being traded as value. They're not good or bad, right? It's something that we have out there, but bad guys figured out how to use it to move value. Can be used in true peer-to-peer UDOI or through an online wallet service. And that's what you see when you see the Coinbase or the Gemini, Kraken, Binance. These are wallet services. No one owns the true P2P. The transaction fees are associated with exchanges, and then there's transaction fees for the transaction maybe required by the network. Ethereum right now is very expensive. Bitcoin is, there's fees to it, and then there's some out there, like there's Bitcoin SV, another one, has low fees. Importantly to know, it's a push system, so it's irreversible. You make that transaction, there's no one to pull it back, unlike a financial institution. Over on the right side, you're going to see Bitcoin, a peer-to-peer electronic cash system. This is the white paper. If you haven't had the opportunity, it might be worthwhile to take a look, download it, read the white paper, and to come up with your assessment on what this was developed for. Was it developed as an investment tool, or was it developed to be a peer-to-peer system? It was developed, so the paper was written by somebody called, or somebody, or someone, or some group called Satoshi Nakamoto. This is the name used, presumed pseudonymous person or persons who developed Bitcoin, authored the white paper, and deployed Bitcoin original reference implementation. We don't know who this person or people are, but this Satoshi Nakamoto devised the first blockchain database. It was first to solve the double spend problem for digital currency using a peer-to-peer network. And that was the previous problems with digital currency, was being able to spend it twice. I mentioned blockchain a couple of times already. Let me just kind of put this in a nutshell here, hopefully. Blockchain is a public ledger. That's basically what it is. So it would be taking a ledger. Now, what does it contain on this public ledger? In the instance of Bitcoin, it's going to contain transactional information, but not the individual transacting behind it. That's what's on the public ledger here. So the amount, date, time, where it went to, where it came from, and so forth, and the amount. What is blockchain? It's a type of distributed ledger consisting of blocks of data. Each block is connected to the next block using cryptographic hash, referencing the previous block. Excuse me. Hey, we like to say at the Blockchain Intelligence Group, we like to say the blockchain never forgets, and it doesn't. If you want to look at a transaction today, you can trace that transaction all the way back to the original transfer of Bitcoin. Cryptography. Cryptocurrency are digital assets that are confirmed on a blockchain using cryptography. They are called cryptocurrencies because they use cryptography that has been proven to be impenetrable. And cryptocurrencies are not secured by people or trust, but by math. When I say by math, I'll give it a simple equation. The equation is 10. The answer is 10. And the person who's solving this needs to solve the equation, right? So, there's many different ways to get to 10. We'll talk about that in a second. Here, it's referred to as mining, but cryptography is using math to solve the problem, make it impenetrable. And so far, it's been proven to be impenetrable. Again, a peer-to-peer electronic system, the double spend issue. I have this 51%. So to make a change on the blockchain, it takes 51% of the nodes to agree. And that takes a lot of effort. So that's why it is very hard to penetrate. It's hard to make changes to. I think what we'll see is that, blockchain, what we are seeing is blockchain technology being used in other areas. So we kind of right now, refer to cryptocurrency and blockchain as the same thing. They're not. But blockchain has a lot of other useful means to it. It's being used for property records and for voting records to store data as well. So it is some interesting times for blockchain. So you'll see that it's not just being used for Bitcoin. Cryptocurrency mining. Bitcoin mining is the process of adding transactions records to the public ledger. This is ledger, past transactions is called the blockchain, as is basically a chain of blocks. So I think we've probably, heard of cryptocurrency mining. The controversy with mining is the energy consumption. I do tell people in law enforcement here in the US, around the world, we have what's called indoor marijuana grow locations. They take a lot of energy to operate. enormous amount of energy. And law enforcement around the world has been starting to mix up or mistaken, mining operations, which are legal. There's nothing illegal about the mining operation until the mining operation is stealing electric from, the neighborhood, just like an indoor marijuana grow location does in many of our cities and communities here in the U.S. Bitcoin miners operate computers on the Bitcoin software that are part of the transaction validation process. So for instance, in an instance where John sends to Doug 1 Bitcoin, a cryptographic problem is transmitted to the miners. Once the first miner solves the problem, which is called proof of work, they transmit to the other miners to verify the date and time. When the transaction is validated by consensus, which eliminates this need for third-party validation, it becomes permanent and irreversible. Transaction visible in near real time. Blocks resolve roughly every 10 minutes, and transactions are fully validated within approximately 2 hours. The winning miner is rewarded newly created Bitcoin, and there's going to be 21. So one of the things with Bitcoin, and this is probably what makes it volatile but gives it value, is there's 21 million Bitcoin limit. It was created at a predetermined rate. When a new block is formed, that miner, and this is why people go into mining and they invest in the machines and the electricity, is they're awarded new Bitcoin. So right now, when there's a new block, I believe it's like 6.25 Bitcoin that are awarded, which is relatively worthwhile to do if you're doing this and you're solving them every 10 minutes here. As I mentioned, with Bitcoin, there is a large use of power. There's just kind of two sides to this. Traditional banking, when you talk about traditional banking and producing money and brick and mortar locations, also drains a lot of power as well. So that's something else. There are a number of cryptocurrencies out there that are becoming more and more less power intensive as well. Hey, I just want to jump over to something you may hear about, and this is something as compliance. If you're talking to your clients, you're talking to crypto, and you want to get a sense of what kind of wallets do they have, right? Well, there's two kinds of wallets to store cryptocurrency. It's a hot wallet and a cold wallet, just to know the difference. When you have a hot wallet, it's connected to the internet, where a cold wallet is not. If you're hiding some Bitcoin, you want to take it off the internet, you might download it to what looks like a USB thumb drive and keep it there, keep it off the internet until you need to move it again or transfer it or convert it. That'd be a cold wallet. So something for law enforcement to know about, something to know about, to know from your customers in case law enforcement does ask and you're able to provide them, hey, they have a hot wallet or they have a cold wallet, and this is what it may be. Again, the key distinction is the internet. Here's where people keep it. Just by having an application on the phone doesn't mean the Bitcoin stays on the phone or the crypto. So some law enforcement agencies, I think more and more know now, just by seizing the phone or the computer does not seize the cryptocurrency. If there is any law enforcement in the audience today, if you do have a case involving cryptocurrency and you're going to make a seizure, you really need to be thinking about making that seizure pre-arrest or when some court filing is done. So something that takes some effort. Unlike if you knew that there was cash or you're seizing cash, where you take that in your possession or a vehicle or something else. The digital currency needs pre-seizure planning. Here's an example of a Bitcoin wallet and also an address. If I've never seen an address before, where it starts with the 1, the capital M, lowercase p. And I say that because when you're taking down an address, you need to be specific on this hash here. Bitcoin wallets always start with 1.3 or BC1, making them easily distinguishable from public and private keys. Bitcoin public keys or addresses are presented in these various formats, but something to know if somebody's coming in and telling you that they have Bitcoin and maybe you want to do a risk assessment on their wallet and they give you some other numbers to start with. You can tell them, hey, start over. You're smarter than the average bear, and that you want the real information. So what's the big deal? In the current form can be more efficient than current financial solutions because the centralized third party is eliminated. Blockchain can create trust between two parties who do not know each other. Blockchain works well for financial transactions, but potentially for any situation in which the need for a third party is not ideal. So you heard about smart contracts. Smart contracts are not legal contracts. Smart contracts are basically an if-then or an if-when type of model. So if we have a smart contract and I am a produce supplier from the Caribbean and I'm sending up to New York and there's a couple of stops along the way, there's potential to get paid right along the way, that if it hits a certain area and is taken in, let's just say in the port of Miami, then it's trucked up to somewhere else and then transferred. That's what the smart contracts, and as if I am that small farmer, producer of whatever that product is, I don't necessarily have to wait until it gets to its final destination to be paid. In supply chain management, it's also helping identify where there may be some sort of compromise to the item. And there was a case where Walmart had a recall of a produce product, and through this they were able to narrow down where it was. So instead of having to basically get rid of the entire product throughout the entire supply chain, they were able to narrow it down to a small group, saving, I would think, lots of money for everyone involved there. It's instant currency conversion increases number of merchants. You're seeing an increasing number of merchants, especially here in the US, and I think you'll see it overseas, that are taking cryptocurrency. The travel rule, I believe Mr. Ricketts was on earlier. I caught some of his presentation. I think he explained to you, so I'll just mention it here real brief, right? It requires both the financial institutions and crypto companies known as the VASPs to collect personal data in transactions exceeding 1,000 US or euro. So something definitely in compliance that we'll be hearing more and more about in the coming year. Just some AML considerations here. So where do we see this, from my perspective, looking at it from the investigator? Well, from the dark market, the dark net, social media apps, they're using crypto to sell everything from illegal drugs, counterfeit drugs, weapons, human trafficking, child exploitation as well. So definitely need to look at that. They can be, what the criminals will use are tumblers that commingle currency, making it more difficult to track through the blockchain. So that's difficult to do. If you're dealing in this in the US, online currency exchanges like Coinbase and Bitstamp are required to register as MSBs and follow AML rules. And like I mentioned, the travel rule, but I know you heard a little bit about that before. What I want to do is also, I kind of put in this overview are some cryptocurrency frauds and scams to be aware of. I'll just go through a few of those in some of the remaining time, some time that I have here. Fake investments, as compliance folks, I'm hoping that you're also educating your staff, your customers as well. And I think crypto is something we need to start educating customers about. A lot of people are coming in here in the US, they're losing money to these fake investments. The fake investments are coins, tokens with no potential for long-term value. This is the one where I say if someone like Kim Kardashian is out there talking about it, you probably want to stay away from it. One thing I do want to mention here is this IPO versus ICO. I think most of us are familiar with an initial public offering. And with an initial public offering, these are private corporations that are going to be listed as public corporations by offering stock to the general public. And you're basically buying a piece of this ownership of this company, right? When you buy a stock, there is work and due diligence that goes behind an initial public offering. So a bank or a reputable accounting firm will look at it and kind of assess, the value of the stock and what the company is doing. There's probably some sort of track record. When something is listed, we'll say on one of the stock exchange, we've probably seen it before. We've probably seen their product, be it, maybe they were going public, and we can assess, is it good? Do we think it has some value? In an initial coin offering, investors generally don't receive ownership shares in the country. Rather, they receive digital tokens that can be used within the boundaries of the platform. There's right now very little regulation. Talking about regulation here, no track record of the product here, and then the product sometimes even changes. Somebody may have an idea. This just may start out as an idea, not as a concept that's been proven or at least existing. But in this ecosystem, they like to try to take something that we know and we trust, and we talk about an IPO, and now we call it an ICO, initial coin offering, something to be aware of, and that's why I put that out there. Mining cryptocurrency scams. These are scams. These are fake mining operations. The thought of easy money and a lot of money there. Do want to point out something here. These fake bounty and airdrop giveaways. Again, something to be aware of for your customers. This is a tweet. You can take many celebrities, politicians take their Twitter. They've been compromised. This is just an example I'm using here. Elon Musk. This looks legit, right? It's got the check mark. It's tweet from Elon Musk. He's got how many followers out there, and basically saying here to all, Bitcoin sent to my address below will be doubled. So basically, you send me $1,000 and I'll send you $2,000 back in Bitcoin. And there it gives out an address. And like I said before, we know this is a Bitcoin address because it's got in the red box there, BC1Q is the address. So send me 1,000, Elon's saying here, and he'll send you back 2,000, right? Another telltale sign, only doing this for the next 30 minutes. So basically hurry up and get on board. I am sure that many of you out there who are listening today are saying to yourselves, well, okay, that's a scam. I'm not doing that, right? You're probably all saying that. Well, that's what it looks like when we graphed it out. And I'll talk a little bit more about visual graphing here. When I mentioned that the Bitcoin ledger is on a public blockchain, and if anybody has done any of this work, you're basically pulling it off and putting it into Excel spreadsheets and trying to make sense of it that way. What we do and some tools do is graph it out, give you a visual representation of it. This is a visual representation of how many people, tried to double their money, right? And this is just, again, graphed out a little bit more visually representation here. The circles are all wallets, and this is just the movement of funds here. Pump and dump scams, I'm sure we're all familiar with those. Again, we hear some celebrity out there pumping up a coin, and then the owners sell it. Fake crypto exchanges, I do encourage people to look for a reputable exchange if they want to, I don't say invest, just try buying a little bit, trying to change a little bit or see what it's like, but do some homework behind it. Blackmailing scams, you've probably all heard of those as well. Phishing and spear phishing, another thing again that we're seeing in the crypto ecosystem. Another one I just want to give an extra second to here: romance scams. Boy, this one is really hitting people hard. A lot of our military members have fallen victim to this. A lot of widows. I'm hearing about is probably every week we'll get a call from some police department, that somebody comes in and says, hey, they were a victim of this. I think that picture sums it up of one of these romance scams, but they want the Bitcoin there. Ransomware, you've all heard of the ransomware. This is, again, just visually traced out. This is the colonial pipeline, the dark side hack, and just the movements of the currency. So like I said, what we're looking for is those on and off ramps. We're looking for how do we get the KYC? Where did it go? To what exchange? One of the things that we do here in our platform is also the behind the scenes work. So we do risk scoring of wallets. Again, those circles are wallets. We're pulling in information off the internet, so while off the dark web, off social media apps. So while we don't keep someone's KYC, if somebody's on Twitter advertising, that they support, some terrorist organization, send me money, we're going to capture that, and then we're going to risk score that. And I think, as I heard before, how do you look at some of the risk here? Well, you look at the wallets and what they're in contact with. Again, this is Colonial Pipeline. This is the money that was sent, and then it was eventually seized by the FBI, just graphed out for you. Like I said, you can go on. There's some open source information where you can look at and track and trace this. This takes a while. I used to supervise special agents that did this work, and it was time consuming. It took a lot of time before we had products that would give us a visual representation or a risk assessment. I'm just going through a couple of Ethereum as well. I just did want to show you what Ethereum looked like. So Ethereum and smart contracts, again, being visually graphed out. This is done all in real time. The other thing to know with these, which I found very interesting, is that you can also pass messages over the blockchain. Yes, it's public. Yes, we can read it. You got to know when to look for it. But what concerned me was, in this instance, they were exchanging encrypted messages. And from my perspective, law enforcement perspective, if I'm a drug dealer and I'm sending 1,000 kilos through the Caribbean Sea, and I can send you an encrypted message of the Latin Lounge where to meet, your Go Fast boats, this would be worth the $60 or $80 it might cost to do it. Hey, I just want to mention a word from our sponsors. Again, I'm with Blockchain Intelligence Group. One of the things, like I told you, we do the graphing, we do the risk analysis. We also offer a course, the Certified Cryptocurrency Investigator course. It's 5 modules going through the basics, talks about Bitcoin, the dark web. As I said, many of the slides here could take 15, 20 minutes to go further into, and forensics. Our training has been taken by law enforcement globally, financial institutions, other institutions that money laundering, anti-money laundering type of institutions as well. So if that's something interested, please feel free to email me, or again, connect with me through LinkedIn. I'd be happy to provide more information. I've also created a little package there to do some hands-on. And if you'd like to see what risk scoring looks like, again, it's something else I'd be happy to give anybody that demonstration there. So with that, I'd like to say thank you for having me. It was a pleasure to visit you in Anguilla and in the Caribbean, and hopefully we'll be in touch soon.